Welcome back. Joining us as we take a look at the day's markets action is Annatjie Van Rooyen from My Wealth Investments. Thank you so much for your time, Annatjie. Quite a lot that's happening in the markets, but of course, we know that one of the big focuses for this week was the data coming out of China. I think after also quite a sour reaction to the press briefing that was given by the Chinese Housing Ministry during the week. But of course, today we did get some good news. Although the third quarter China GDP did come down from the second quarter, it still managed to top analyst estimates. And then we also got retail sales data and industrial production that surprised to the upside. Just shed some light on that data and really how markets have reacted.
Good afternoon, Annatjie. Thank you for having me. Yes, China really has been dominating the news headlines lately ever since they started announcing the stimulus programs. And the GDP numbers this morning beat expectations. They came in with 4.6%. And if you take that number, that 4.6% is year on year. And that number was achieved before the latest aggressive stimulus programs were implemented or even announced. So that makes us very positive for the fourth quarter. And I think that puts them on path to reach their 5% target for the year. And as you have rightly mentioned, then they've also beat expectations with industrial production and retail sales. And the UK also came in with better than expected retail sales. So the macro picture is actually looking quite positive at the moment.
And even the US earlier on in the week. So really just some cheer there that is being provided for investors. And talking about cheer, we did see cheer in Netflix's stock. And this is, of course, after it came out with third quarter earnings that surprised it to the upside, both on the top line and on the bottom line. Of course, we did see a climb on that share of about 5% in pre-market trading. Is Netflix on a solid growth path here?
Yes, I think so. I think that price earnings ratio will unwind rapidly as they also now have announced that they will be adding live sports events to their channel. And they have been very successful in cracking down on password sharing. And it does seem like they're actually winning the streaming wars. So guidance from management also for improved margins and improved cash flow going forward. I definitely think that it still makes for an interesting investment case.
Well, another interesting investment case, but I don't know if it's from the upside, is Pick n Pay. They released a trading update, an interim trading update last night. I think it was 6:15 after market close, and really seeing there the loss that is expected to widen by as much as 20%. I'm quite surprised though, because I looked at the share today and I was actually expecting carnage, but actually it's not down as much as I thought it was. I think the last time I checked, it was down just more than 1%. Are all the bad news baked into Pick n Pay at this point?
I think so, Annatjie. There's a restructuring going on, as everyone knows, and even though they're expecting that loss for the year to end 28 February 2025, they expect a turnaround after that. But they have managed to come up with a 60% increase in online sales, plus the Boxer stores have performed extremely well. And that specific brand name, they have been able to achieve an annualized return of 19% per annum over the past 3 years. So I think the exciting news here is that Pick n Pay did get shareholder support for spinning Boxer out of the group and listing them separately towards the end of this year. So, and I think that's why you've seen that share price reaction, is because there's a huge value unlock if they manage to unbundle Boxer and list that separately.
All right. And again, let's also go into another share, but actually this one, there was actually quite a strong reaction to it. Renogen also coming out with an interim trading statement there, and that share slumped more than 4%. Of course, they did say also that their loss will be widening by as much as 63%. I don't know, because I kind of expect Renogen to still be in loss-making territory, but it is maybe a surprise that the losses are just widening instead of maybe remaining flat or just coming down a little.
Yes, I think it's a huge disappointment for shareholders. There's been a lot of hype around this share, and I have no doubt that at some point in the future, shareholders will definitely make money because it's no secret that there will be demand for their product as there will be demand for alternative energy sources. So one needs to be patient. And I also think that, you have to wait until they actually report those numbers so that one can see exactly where that loss came from. Because this company does have dollar denominated debt. And if we move into a lower interest rate environment, they will also benefit from that. So this company is trading at quite a huge discount to its fair value. So investors will have to be a bit patient for longer, I suppose.
I'm one of those patient investors, Annatjie. Well, let's get to your stock pick for today. What are you choosing?
I'm going to go with Anglo Sonati on the back of what's happening in China, because I do believe that these stimulus programs will definitely filter through to trend reversals and cyclical growth. And it's just interesting how the Anglo-American share price is behaving and Billiton share price not behaving as well. So I'm hoping that Billiton will, after the 6-month period, return to the negotiating table. And even if they don't, then I still think Anglo is very well positioned to benefit from the lower interest rate cycle that we're entering.
All right. Well, thank you so much for your time and really just giving us insight on what has moved investors' money today. Annatjie, that was Annatjie Van Rooyen from My Wealth Investments.